Nippon India Nifty Auto Index Fund. Will investing in this NFO help you create a financially secure future? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. So the NFO, it opens on 14 November 2024 and closes on 28 November 2024. And some of the key features of this fund are: it is an open-ended fund type, it belongs to the category of equity thematic fund, and it has Nifty Auto TRI as its benchmark, and there is no entry load as well as exit load in this fund. And the minimum investment amount you need to start investing in this fund is just 1000 rupees. And the fund managers of this fund is Mr. Himanshu Manje, and according to the riskometer, the risk involved in this fund is very high. Now, if you take a look at the primary investment objective of this fund, which is to provide returns to the investors that before expenses closely correspond to the total returns of the securities as represented by the underlying index, which can be subjected to tracking error as this is an index fund. Now, as we have a basic understanding about this fund, let us move on to understanding the index it is representing. So the Nifty Auto Index is designed to reflect the behavior and performance of the automobile segment of the financial market. The Nifty Auto Index comprises 15 tradable exchange-listed companies. So the index represents auto-related sectors like automobile 4-wheelers, automobile 2 and 3-wheelers, auto ancillaries and tire. So Nifty Auto Index is computed using free float market capitalization method, wherein the level of the index reflects the total free float market value of all the stocks in the index relative to particular base market capitalization value. So this index can be used for a variety of purposes such as benchmarking fund portfolios, launching of index funds, ETFs and other structured products. Now let's take a look at the top 10 holdings under this index. So, the top 10 companies are Mahindra and Mahindra Limited, Tata Motors Limited, Maruti Suzuki India Limited, Bajaj Auto Limited, Eicher Motor Limited, Hero Motocorp Limited, TVS Motor Company Limited, Samvardhana Motherson International Limited, Bharat Forge Limited and Bosch Limited. And as you can see from the index returns as on October 31st, 2024, from the data and statistics we can understand that in 1 year, it has produced a return of 48.82%, while in 5 years, it has produced a return of 24%, and since inception, it has produced a return of 17.88%. And even in the graph, you can see that compared to short-term period, in long-term period, it has performed really well. Now, let's move on to analyzing this fund by analyzing the pros and cons of investing in this fund. So, let's start with the advantages. There are 4 main key advantages to investing in this fund. Number 1 is the direct exposure to the auto sector. The fund offers direct exposure to India's top automotive companies, providing a chance to capitalize on the sector's growth trend, innovation and consumer demand. Number 2 is the benefit from industry growth and trend. With India's increasing focus on mobility, EV and infrastructure development, this fund could tap into the long-term growth potential of the automobile industry. Number 3, diversification within auto sector. Investing in the fund means gaining exposure to various segments of the auto sector, including passenger vehicles, commercial vehicles and two-wheelers, helping to spread out the risk within the industry. Number 4 is the potential for high returns during industry upswings. Auto stocks often perform well when the economy is strong and the consumer spending is on the rise. This fund could see significant gain during periods of economic growth. So these are the advantages to investing in this fund. Now let's take a look at the disadvantages. There are also 4 main key potential drawbacks to investing in this fund. So number 1 is the cyclicality and the economic sensitivity. So the auto sector is highly cyclical and sensitive to economic condition. During downturn or periods of reduced consumer spending, the fund's performance could be negatively impacted. Number 2, sector-specific concentration risk. As a sectoral fund, it comes with concentration risk. If the automotive industry faces challenges like policy changes, supply chain disruption, or shift in consumer behavior, it could heavily affect the fund return. Number 3, interest rate impact. The auto industry is also affected by changes in interest rate, as higher rates can lead to reduced vehicle financing and lower sales. Number 4 is the environmental regulation and technological shift. The sector must constantly adapt to the environmental regulation and the rapid technological advancement, like the shift toward electric vehicle. These transitions may impact profitability and require substantial investment by companies, adding to the fund's risk profile. So these are also some of the potential risks you might be undertaking while choosing to invest in this fund. So carefully go through these factors and then decide if it's worth investing or not. So what is the final takeaway of our analysis? Should we invest in the Nippon India Nifty Auto Index Fund? Is it worth investing? As we can see from our analysis that this fund could be a great way to gain exposure to India's diverse automotive industry and potential growth driver like EV and infrastructure. However, it's important to consider the cyclical nature, regulatory risk, and concentration factors before adding it to your portfolio. So it depends on what kind of investor you are and if you're comfortable with those kind of associated risks with this fund. So it depends on those factors as well. But our personal opinion is that if this fund as an index fund, it might also be suitable for an ultra conservative investor who's not at all willing to invest in actively managed fund. But if you do want to invest in an index fund like this because you're an ultra conservative investor who's not willing to invest in actively managed fund, then our suggestion is that there are already similar index funds out there in the market that compared to this fund have a lower expense ratio and lower tracking error, which you can give a chance to. And also, if you are someone with a higher risk appetite, actively managed fund have the potential to deliver higher returns compared to an index fund like this. Because as an investor, if you're expecting dynamic fund management and even looking for investments that can beat the market, should avoid investing in this fund, because as an index fund, good or bad, it will only try to replicate the index and try to match the returns the index is bringing in. It will not try to beat the index itself in terms of return, or it will not follow its own course of taking decision like course corrective measures or even capitalizing on opportunities. It will only try to replicate how the index is performing. So if you want a dynamic fund management, active funds are the best to invest in. And finally, if you feel like you do not have sufficient knowledge to navigate the market and choose funds according to your ability, or you feel like you do not have the time to research about it because your life is already hectic as it is, then you can definitely consult with a certified financial planner or a financial advisor for more professional guidance. Like they will look at the suitability of the fund you want to invest in by taking in factors like investment objective, risk profile, overlap ratio, allocation, just to see whether it will be suitable to your investment portfolio or not and help you achieve your financial goals or not. So making your investment journey hassle free in this way. Definitely seek professional guidance if you do feel like you need it.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.